Buying stocks might sound intimidating, charts, tickers, red and green numbers everywhere. But in reality, it's easier than ever. And more importantly, it's one of the most powerful ways to build real wealth over time. In this video, I'll walk you through how to buy your first stock step by step. Even if you've never invested before, by the end of this video, you'll know exactly what to do, where to start, and how to avoid the costly mistakes beginners make every day. We'll also talk about the best investing apps for beginners, how much money you actually need to start, and simple strategies that can help you grow your portfolio, even if you're starting small. So, grab your coffee, sit back, and let's demystify the stock market together. Let's start with the basics. What exactly is a stock? A stock represents ownership in a company. Think of it like this. Imagine your favorite pizza place is growing, and they decide to sell small pieces of ownership to raise money for new locations. Each piece is called a share. When you buy a share of a company like Apple, Tesla, or Microsoft, you now own a slice of that business. If the company performs well, makes more profits, and investors believe in its future, the price of your share goes up. And that's how you build wealth through capital appreciation. But that's not all. Some companies also share part of their profits directly with investors in the form of dividends, small cash payments sent to your account regularly. Over time, this combination of growth and dividends can compound into serious money. A lot of beginners believe you need thousands of dollars to invest. That's not true anymore. Thanks to fractional shares, you can start investing with as little as $10 or $20. Let's say one share of Amazon costs $180. You don't have to buy a whole share. You can buy a fraction of it. This feature makes investing more accessible than ever. So even if you're on a tight budget, you can still begin building wealth today. The key is starting early and being consistent. Before you can buy a stock, you need a brokerage account. Think of it as your digital wallet for investments. In 2025, some of the most beginner-friendly brokerages in the U.S. include Fidelity, Charles Schwab, Robinhood, Webull, E-Trade. These apps allow you to buy and sell stocks right from your phone. No paperwork, no middlemen. When choosing a broker, look for 3 key things. No commission fees, so you're not paying extra just to trade. User-friendly interface. Simple dashboards make learning easier. Strong security and support. Your money needs to be safe. Once you open an account, you'll verify your identity, connect your bank, and deposit funds. It's as simple as setting up PayPal or Venmo. And if you're not sure which one to pick, start with a demo account or paper trading feature. It lets you practice buying and selling with fake money until you're comfortable. Now, before you buy your first stock, take a deep breath and do your research. This is where most beginners get it wrong. Don't just buy a stock because it's trending on TikTok or mentioned by your favorite influencer. Instead, look at 4 simple factors. Revenue and profit growth. Is a company actually making money? Leadership and vision. Are the people in charge credible and innovative? Debt and cash flow. Can a company pay its bills and invest in new ideas? Competition and market share. What's its position in the industry? You can find this information for free on websites like Yahoo Finance, Google Finance, or directly through your brokerage app. Look for consistency. You want companies that show solid performance year after year, not just hype. For example, if you check Apple's financials, you'll see stable earnings, healthy cash flow, and long-term product demand. That's the type of company you want to own. Remember, investing isn't gambling. It's about owning great businesses that can grow for decades. Okay, now it's time for the fun part, placing your first trade. You'll have 2 main order types. Market order buys the stock immediately at the current price. Limit order. You set the exact price you want to pay. Let's say you want to buy Microsoft, currently at $400. If you place a market order, you'll get it right away at roughly $400. But if you only want at $390, you can place a limit order, and your trade will execute only if the price drops to that level. For most beginners, a market order is fine when starting out. After that, choose how many shares or fractional shares you want to buy, then hit confirm. Boom! You're officially an investor. Here's where long-term success comes in, building a balanced portfolio. Don't invest all your money in one company, even if it's your favorite. If that company struggles, your whole portfolio suffers. Instead, diversify. Spread your money across multiple companies and industries. You can also invest in ETFs, exchange-traded funds, which hold dozens or hundreds of stocks in one package. For example, the S&P 500 ETF gives you exposure to 500 of America's biggest companies, like Apple, Google, and Coca-Cola, all in one investment. ETFs are one of the simplest and safest ways to build wealth with minimal effort. Think of them as instant diversification. Here's where things get really exciting. Compound growth. Albert Einstein called it the eighth wonder of the world. When you reinvest your profits, whether dividends or capital gains, your money starts earning money on itself. Let's say you invest $1,000 and earn 10% annually. After 1 year, you have $1,100. If you reinvest those gains, in year 2 you earn 10% on $1,100, not just your original $1,000. Keep that going for 20 years, and your $1,000 turns into nearly $7,000 without you lifting a finger. That's the magic of compounding. The secret? Start early and stay consistent. Now, let's talk about what not to do. Here are 4 common beginner mistakes. Buying hype stocks. If everyone's shouting about it online, you're probably late. Selling too quickly. The stock market fluctuates. Stay calm during dips. Ignoring fees and taxes. Even small costs can eat into your profits over time. Investing money you can't afford to lose. Always keep an emergency fund separate. Smart investors focus on discipline, patience, and education, not emotion. The key to becoming a successful investor isn't finding the next Tesla or timing the perfect entry. It's consistency. Invest every month, even small amounts. Use dollar cost averaging, which means you buy regularly no matter the market price. This smooths out volatility and removes emotion from the process. And remember, the market rewards time and patience, not panic and guessing. The longer your money stays invested, the more powerful compounding becomes. And that's it. Your complete beginner's guide on how to buy stocks in 2025. If you found this video helpful, please hit like, subscribe, and turn on notifications for more easy investing tutorials. Speech balloon comment below. What's the first stock you plan to buy this year? Thanks for watching, and remember, the best time to invest was yesterday. The second best time is today. Remember, this is not a financial advice. Do not forget to subscribe and turn on notification button, as we will continue to give you more information on how to buy stocks and best time to buy stocks. See you on the next video.